But what you will also note with our bank statement is that this came through our Intelligent Character Recognition, or ICR. What we are doing is every document that the borrower uploads or anyone uploads, the system is going to recognize, name, and categorize as an income, asset, credit document. It's going to put it in the appropriate place. It's also going to start extracting data. And there are 12 documents so far that we are already extracting data from. This took the name of the bank, and it gives me a confidence score. How confident is the system that this is the correct data? I can see the document here, but I can also see all the transactions have already been extracted from this bank statement. I can see the balance statement. I can see the statement details. I can see that there's another name on here. Now that might automatically send out a request to the borrower to explain who this other person is on the bank statement, and also assurance that they still have full access to those funds. And then again, under the document details, I can see the date of the document, the default validity period, and the expiration date that's been calculated. Again, if this passes, it's going to change that status from reviewed back to expired. When I review this, or when you decide what the trigger is, it can write the data to the loan. And that can also be done automatically, and it can be done automatically based on the confidence score. So if the confidence score is high enough, automatically write that data to the loan and put that asset in a verified status. Now, another document we are extracting data from is the purchase contract. This helps in multiple ways. First, if you started the loan file as a TBD, and then the borrower uploaded the contract into the request that automatically went out because we know it was a purchase, you now have a TRID file. And you may or may not know it in other systems because someone has to pick up that document and input the property address. Our system will pick up the property address, automatically write that to the loan file, and then TRID, and then go down your disclosure path. But what it also picks up are contingency dates and closing dates, the purchase price, the fact that there's a $15,000 deposit that was made on this contract. That adds an asset line for $15,000 for the purchase money, the earnest money deposit. But it also picks up credits and concessions. So if someone is reading this quickly and didn't pick up the fact that there's a $5,000 seller credit on this file, then we end up in trouble when we get more towards closing. This can pick it up, and it also is going to calculate the amount of that seller concession against the requirement for the loan product. So conventional loan, 80 or under, 6% max. It's going to compare the 5,000 to what the max is, and then potentially add activities for that to be fixed. Again, document details picked up. We can mark this as reviewed and then write that data to the loan.